Shares of DR Horton are lower today. The home builder downgraded to sector perform from outperform at RBC. Let's take a look at what we're doing here, because over the last, I don't know, month, 3 months, these housing stocks, Josh, haven't done a lot. As much as you like housing, you don't play it through these names. And I'm wondering, number one, why that is, and then the name you like best in the space right now as well.
Yeah, well, I have before. I've been in all the housing stocks. I've been in the ETF. But I think what's going on with housing now is that the next wave of buyers are encountering prices that are just completely ridiculous and out of the range of normal buying. And that sticker shock has come about, I believe, in part due to all of the excessive stimulus, the Fed buying mortgage-backed securities right now, which I can't think of a single reason why they think they would need to continue doing that, other than they're not sure how to stop. So if there is, in fact, a taper, I don't think mortgage rates will shoot up, but maybe that market will normalize a little bit. There won't be quite as much financing available, and maybe home prices will come back into a more reasonable range. That's an issue. The second issue is, of course, labor and materials. That's something else that I think will be transitory. I think in September, when the extraordinary federal unemployment benefit sunsets, in addition to all the manufacturing capacity coming back online, that should help out a little bit there too. So I think these stocks are fine. I think we're in a 10-year run for millennial household formation. I'm playing it through Leslie's, which is swimming pools, not just the installation of pools, but the ongoing maintenance, which is a cash cow business, plus all the accessories, all the tools they sell to professionals, and all the retail business they do at their stores and online. I think Leslie's is a growth company in a secular growth business, and I think it's a really great way to play the idea of home ownership and people wanting more out of their home.
Sarat, you're also playing it, housing, I should say, through Lowe's, before with Masco, now with Fortune Brands, again, not through the home builders themselves.
Yeah, I agree with Josh. I think I'm playing it ancillary through other areas. I mean, I like Lowe's. It's kind of the second sister to Home Depot, but it's got the opportunity for higher margins going forward. And we're still going to have people spending a lot of money on their homes going forward with the amount of cash that the consumer has. So I think Lowe's is the opportunity here. We made money in the past with the Masco. And you're also getting to, these stocks reflected over the last year, the opportunity to make money before really earnings caught up to them. So I think you have to be a little more selective here. It's not as easy as it was about 9 months ago.